Michael Spencer, a fabulous guy. I had a long chat with him yesterday, and I just want to get a sense of, how the world is changing with digital transformation, geopolitics. Of course, part of that and part and parcel of that is Beijing versus Washington, and a whole host of other things that Michael Spencer knows far about than I do. And so please welcome him to Hong Kong virtually.
Thank you, Rish. Pleasure to be with you.
Well, you're not on mute. That's great.
No, I'm not.
Michael, give us a sense of this transformation, where we were and where we've come to.
Good. Well, I'm going to try to do that in two parts. So the short-term and medium-term part is that we've exited a 3 to 4 decade period of kind of powerful deflationary forces. A good deal of that had to do with the adding of massive amounts of productive capacity from the emerging economies. And for a variety of reasons, as we exited the pandemic, some secular trends have substantially changed the supply side of the global economy. It's getting more expensive. It's getting less elastic. When inflation finally, appeared in the last year and a half, basically the supply side has given us almost no help in responding to that. So what are these secular trends? I mean, we all know that the central banks, to some extent, bet on the idea that these supply side bottlenecks and constraints were transitory. Some of them are. China's out of COVID, zero. Ocean shipping costs have come back down. We don't have as much in the way of semiconductor backlogs and so on. But there are some underlying trends that are keeping the inflationary problem, at the forefront. And there are many of them. We don't have time to sort of dive into all of them, but a very substantial part of the global economy is aging. We have declining productivity trends. So the powerful digital tools that we'll talk about later really haven't kicked in and produced a reversal in that. And that we have huge changes in labor market behavior. We have a systematic pattern of diversification in the global economy in response to a variety of shocks from climate change, from the pandemic, and from geopolitical tensions. Those trends that I'm not saying those diversification patterns driven both by private sector incentives, but also by an increasing role for public policy in moving us in this direction, toward reliable trading partners, et cetera, et cetera. And so when you add all these things up, we just have a supply side that looks really different. And the deflationary forces that, we were used to in the past decades, where we could have zero interest rates and massive injections of liquidity via central bank asset purchasers with no sign of inflation, those are definitely, in my view, in the rearview mirror. As we move into this decade and complete the inflation fight, the chances that, we can have the central bank as the only game in town, and so on is not right. I think you have a generation, Rish, of people who have spent their entire career in a non-inflationary environment, and the mindsets are in the process of changing rapidly. So I call this regime change. It's a very, very different global economy.
Michael, how far is it dictated to, and you've just touched on some of the points here, by the 4Ds, digitalization, demography, decoupling, and also, of course, and very importantly, demographics?
Well, so digitalization, in my way of thinking, is the thing that creates the potential in the latter part of this decade to produce a reversal of some of these trends. If you have a supply constrained global economy, and demographics is definitely a contributor to that. It's a third of the world's population in aging countries, but they account for almost 80% of global GDP. So that's just a plain headwind. And when you have this kind of headwind added to by decoupling, this is a somewhat fragmented, partially deglobalized world. And it doesn't look like we're going to be able to sort of exit that trend in the near future because of lack of trust and the geopolitical tensions, which we're obviously finding hard to resolve. And a part of that is that some of the international institutions have been marginalized. There are many dimensions to this. So, decoupling is in part occurring because the United States and Europe have used economic policies as tools of international relations in response to the war and other issues that they think they have that relate more to national security than they do to sort of economic efficiency. So I would say demographics and decoupling are an important part of the process of making the supply side much more rigid and less responsive and elastic than it used to be. And digitalization, while it takes time to kick in, they're really incredibly powerful tools. I mean, if I looked recently at the breakthroughs in AI in the last 15 years. From speech recognition, handwriting recognition, image recognition, and now the large language models. So we have incredibly powerful tools to drive productivity. And if you live in a world, where you have an aging problem, you have labor market shortages almost everywhere. People are saying, I want to be flexible. I don't want to be in dangerous circumstances. I don't want to be around stress. And I don't want to be in these low-paying jobs. I mean, we have labor shortages in the 5 big employment sectors in America, which count for 45% of total employment. All of those things are burdens on the supply side that a surge in productivity would help alleviate. In fact, more than help, it would be a huge change in direction. And I'm a bit of an optimist. I think that's what we're going to see in the second part of the decade.
I was going to come to that. I was going to just ask you, what are we morphing into? But before I do that, just one thing I'd like to ask you is, as well, because of what you said, does it mean that now inflation is getting more embedded and it's marking a structural shift? We've got so used to easy money and a lack of inflation. And, people said that when the Fed was going to put its foot to the metal, as it were, that it was a bit like taking heroin away from a heroin addict and we'd be in deep trouble. We've not seen the effects of that yet. But is inflation going to be higher for longer?
No, I don't think so. I mean, there's really 2 questions here, Rish. One is, are the central banks going to get inflation under control? And I think the sort of answer to that is, despite the fact that we don't know how fast and whatnot, and it affects markets and market participants, and they have to pay attention. My view is they'll get inflation under control. So the second question is, but is inflation lurking in the background? Or to put it differently, in the coming decade, could we go back to zero interest rates and huge injections of liquidity, in pursuit of employment and growth coming from central banks without running the risk of inflation? And I think, my take, because of the supply side things that we just talked about, my take on that is the answer is a definitive no. So I think we're back to a world in which inflation is gotten under control by central banks, but it's lurking in the background, and there's just no chance of using monetary policy to stimulate without re-triggering the risk of inflation.
This is exactly
so it's a very different world.
Exactly what I was going to ask you. Is monetary policy, the way it's being employed, fit for purpose?
The old monetary policies are not. I mean, it's just not going to be possible to have various rounds of QE, massive asset purchases, huge injections of liquidity without triggering inflationary responses, unless we find big increases in the sources of supply, either from productivity increases or from unlocking the remaining kind of productive capacity in the world in some of the low-income countries. So I don't know how to assess that, but it doesn't seem like it's going to happen, in a great hurry.
So if you were Jay Powell, what would you do?
I'd resign. No, I'm just kidding. He has a very tough job. I think what he's doing is the right answer. I'm not going to second guess on whether pausing at this point is a good idea. I'm not a monetary economist, and it's none of my business. But I believe that they're serious about the inflation fight. They're willing to accept a considerable amount of economic pain if it's necessary. They're hoping they can minimize the amount of economic pain that they impose. As I said before, they're getting almost no help from the supply side, both domestically and in the global economy. So I think they'll stick with it. My best guess is it's going to take another, couple of years, because the economy is sort of stubbornly strong. in the labor market area and other areas. So it's going to, it's not an easy glide path to get inflation under control. But I think that's what they're going to do. And if I were in his position, I would do it too. I think their credibility depends on it. There's a deeper issue that is being discussed, which is whether 2%, is the right target and whatnot. But I don't think the central banks can, at this point, start moving the goalposts around without damaging their credibility. So I don't think we'll see them do that.
In the US, anyway, the consumer is very strong. We always used to refer to the indefatigable American buyer. Why is the job market also so strong? That's one of the reasons why I suppose consumer spending is so strong. And what about the nature of jobs which are at the moment on offer? And do you see a change within the job market?
Well, there's a huge change in the job market. I mean, if you talk to HR people, you get the answer back vociferously in multiple dimensions. The younger crowd, an older crowd has dropped out of the labor market. The balance sheets are in pretty good shape. When people retire, at least the ones that have decent balance sheets, they don't stop consuming. So you get an automatic increment in the demand supply imbalance. The work from home type of flexibility, which includes probably over half of the jobs in the economy, has become an important priority on the supply side for the job markets. And so it's a strong job market, and it's a strong set of consumers that makes the inflation fight more difficult.
Well, let's turn to China, because it seems to be the antithesis. We have a job market which is creaking, youth unemployment up to 20.8%. We've got a slowdown taking place when you're taking care of base effects. Retail sales not doing very much, industrial production neither. So where does that leave Beijing and its authorities?
Well, I'm sure you've discussed them extensively in the last day or so. I mean, the fundamentals of the Chinese economy are very strong. I mean, the human capital is incredible. The technology advancement is extraordinarily powerful, and so on. But they are exiting from COVID with a bounce. And the consumers are still slightly cautious. I've heard that some of them are using their assets to pay off their mortgages as opposed to consume some more. I think the real estate market is starting to come into balance, but that's a difficult challenge. Municipal finances are, kind of a wreck, and that needs to be addressed from a policy point of view. And I think both the bureaucracy and the private sector needs kind of clear direction from senior policy people about what their role is in order to unlock their full potential in terms of investment and taking aggressive action with respect to the things that need to be addressed. So, youth unemployment is a problem right now. I've been told that some of the graduates of elite universities are driving for Didi or delivering for Meituan. I don't think that's a permanent condition, but that China has a significant set of policy challenges and headwinds that will probably occupy them for the next couple of years. But in the end, I mean, their track record of aggressively addressing problems and getting them sorted out, I think, has been impressive, and I don't see any reason to think that that pattern will change.
Would you put it somewhat down to, well, of course, COVID and the COVID zero policy had a lot to do with this, but on top of that, don't we have this shift taking place as well towards services and so-called common prosperity, which Xi Jinping has espoused? And what is common prosperity? Is it leveling up or is it leveling down?
Well, I think in its best form, it's leveling up. And some of these tools that I claim are going to be productivity enhancing in the future are also part of the leveling up process. So fintech, for example, is in part as successful as it is because it reaches underserved populations, and there's lots of studies, including important studies in China, that document that. But it's a pattern you see all over the world. By the way, I mean, one of the good things about China is that, notwithstanding the headwinds we just talked about, it is part of the global explosion of entrepreneurial activity. I mean, it's the second largest producer of unicorns. Everybody I talk to in the investment world thinks there's lots of opportunity there. They may have different views about, the kind of cross-border investment risks associated with that, but I think the fundamentals there are really strong. So yeah, I mean it's a mixed picture, but on balance, I think looking forward, China is the center of the shift of the global economy, the center of gravity of the global economy to basically to Asia, and that process is not going to get reversed anytime soon. This is going to be the area of economic mass and probably the growth engine for the global economy.
A curate's egg, then, you could describe it possibly, good in parts, bad in other parts, and fundamentally, property. Does it go down to property, what's happened in the property market, and that resulting in a huge loss of, I suppose, confidence to spend, perhaps?
Yeah, I think there's some of that. I mean, there's no question that in the Chinese economic model, which worked spectacularly well for a long period of time, and was characterized by levels of investment that haven't been seen anywhere else in the world ever. But you can overuse that model. So I think on the household side, excessive reliance on the real estate sector, is coming home to roost. And in the economy more broadly, I mean, if you want to drive a consumption-led economy or increase the increment on the aggregate demand side of the consumption enabling part, then basically, you've got to deliver household income, and household income is still relatively low on a comparative international basis, and savings is relatively high. So it's a challenge, but it's part of the transformation of the economic model that the Chinese authorities need to engineer.
Broadening it out again, you've got geopolitics playing a big role. Is it now the alpha for economics, globally speaking? And of course, I'm referring to the war partly, or what Moscow would like to call the special military operation in Ukraine, and a trade war with technology characteristics between Washington and Beijing.
Yeah, I mean, this is not, in any sense, an ideal circumstance. But the simple truth is, we lived in a world in which the structure of the global economy, think of it as global supply chains, were basically determined by efficiency and comparative advantage characteristics, and that world's in the rearview mirror for sure. For a lot of different reasons, lack of trust between China and the United States, the American attempt to deny access to critical technologies and products that are related to them, in order to impede China's march to, the frontier, if you like, in critical technologies, including semiconductors and artificial intelligence. I think people sometimes, refer to this as deglobalization. It's very hard to see how that could actually occur. It's probably better to see it as sort of partial and selective deglobalization in areas where the overlap between national security and defense on the one hand and sort of economics on the other is particularly, striking. It happens to be, as you just said, in a whole variety of high technology sectors. But I think it would take a fairly substantial sequence of big mistakes on both sides if they let this sort of spill over and start to become a kind of a much broader pattern of decoupling. And thus far, it doesn't seem like that's the direction anybody wants to go. The other thing that's very striking to me about this world of kind of, fragmentation and, various blockages in global flows, technology, data, trade, investment, and so on, is that virtually the entire emerging, economy world has been particularly vocal about not wanting to play the game in that form. And when you add them all up, that's quite a lot of economic mass in the global economy. So I think one of the things to watch is whether the emerging economies, reluctance to participate in sanctions, to get engaged any further than they have to, in this sort of, tit for tat battle between the United States and perhaps Europe because of the Ukraine war, got thrown into the, we got forced together under NATO because of that. But these economies don't want to play the game that way, and I think it's going to be interesting to watch to see if they can be an important force in driving us toward a somewhat different but useful form of multilateral structures in the global economy.
Mike, so what are we morphing into? Are we going to Cold War 2.0, one completely different? And at what stage unless things of course calm down, some of these emerging markets, which are at the front line of the attention of the major blocs, that they have to pick a side, as it were?
Yeah, so what they're trying to say to us is they don't want to pick a side. they don't particularly, they certainly, they have no interest whatsoever in disconnecting themselves from the developed economies on the one hand, and for lots of good reasons in every aspect of international relations, trade flows, global flows. But they certainly don't want to disconnect themselves from China. I mean, China is a major trading partner for, at risking slight exaggeration, almost everybody in the world. It's the major investor in Africa. It is a major investor in Latin America. Via this state-owned enterprises and other channels. So they're basically, I think, what these economies are going to do is to say, we're going to do our best to prevent you from forcing us to take sides. And it's not clear to me that either China or the United States has the power to force them to do that. They're not. It's not like the Cold War. The vast majority of the developing world during the Cold War was in somewhere between low and extremely low income categories. The vast majority of the developing world now is in the middle income category and is much stronger in multiple dimensions. Fiscal capacity, financial stability, ability to finance their own investments, and so on. So this is a very different world. I don't expect some version of the Cold War of the type that we saw before to emerge in this environment. And so what are we morphing into? We're morphing into a world in which we don't have as reliable a reserve currency. The United States dollar is hard to replace, but it's on a less attractive reserve currency if there's a risk that they'll take away your reserves if they don't like you, etc. It's a more complicated, fragmented world for multinationals and people who operate in the kind of international dimensions of the global economy. You're subject to difficult, complicated, and sometimes flat out conflicting regulations. And none of this is good for sort of economic dynamism and performance. So I think we just have to accept that that's the world we're going into. But it's not a world in which anybody has any serious incentive or interest, outside of flat out war, to kind of dismantle the thing completely.
Just touching on what you said, Mike, about poverty in Africa, etc., but people are or feel more wealthy than they were, perhaps not in real terms. How is then, therefore, we've seen the labor market change. You talked about the supply side of things, and that's certainly one of those things. And, you did work on this, of course, and you're noted for it. How is this evolving and playing a role as people also, as we go back to the whole demographic thing, that, you're going to have to support an elder generation, and there are going to be a lot more old people?
No, that's right. I mean, you've got two things driving the aging part of the global economy, which, as I noted earlier, is by far the biggest part. And so you have rising dependency ratios, you have increased longevity, and then you have this very pronounced pattern of declining fertility rates, very low fertility rates. I mean, they're hilarious projections of the populations of various countries. I mean, Japan declining by 50% over a 75-year time horizon. Somebody did one for Italy, where I lived part of the time, where our population was declining by, I think it was something on the order of, 15 million from 60 million over a long period of time. This all assumes the demographics stay the same, including the immigration patterns. So I don't actually think that will happen. But yeah, this will produce fiscal stress, depending on the way the social security systems are built. If you look at the United States case, I think the thing that people sometimes forget as we kind of stare at the sovereign debt to GDP ratio having exceeded 100% for the first time since just after World War II, the thing that people forget is the non-debt liabilities. many of which are associated with aging, pensions, healthcare, and so on, are actually huge
Mike,
in relation to the sort of formal debt thing. So this is difficult. If
Mike,
you
we're
want to
running out of
stop me, I
time.
mean,
We're running out
I
of time.
saw.
I just
Okay.
I just want to just get through a couple more questions, and
Okay.
quickly, who are going to be the winners and losers, and how much are they going to be dictated to by this thesis on demography?
Uh, that's, I think, entirely dependent on whether we get the productivity surge that I suggested we could get earlier. I mean, the burden of hot rising dependency ratios goes down substantially if you get this productivity surge that I think these various technological tools and that we're being given, are actually effectively deployed. So I'm kind of an optimist about that.
You are noted for your job signaling model. What does it tell us, and is it relevant anymore?
Well, that's a good question. How much time do you have? I'm kidding. The job market, so everybody knows that there are informational gaps and asymmetries in lots of different markets, and signaling is one of the ways markets try to close those gaps and prevent the extreme deterioration in market performance that you get if those gaps are. It's not the only mechanism. We have disclosure regulations all over the place, in financial markets and, food, drugs, safety, et cetera, occupational safety. So there has the information age changed this? Yes. I mean, the informational structure of markets and the global economy is very, very different than it was 25, 30 years ago. And so I don't think we can sort of just stand back and say, yeah, it's all kind of roughly the same. On the other hand, if you ask yourself the question, does this densification of the sort of informational structure of the whole global economy mean that we don't have problems of informational asymmetry and things that are related to it? I think the answer to that is no. That is, we still have issues of this type, even though the availability and low cost of information has actually closed some of these informational gaps in a beneficial way.
Are you optimistic?
Yeah, I am actually. I think, I mean, maybe it's irrational, but I think for two reasons. One, I think people, eventually recover their senses and stop, engaging in behavior that's a kind of the opposite of win-win, lose-lose. And so that's a bet on sort of, sensible, globally minded people, prevailing in the way policy agendas are set. And the second thing is, if we didn't have these tools that I talked about, declining solar costs, $250 for GNA sequencing, et cetera, semiconductors with 2 nanometer, the separation in prospect, artificial intelligence coming in waves, and we haven't seen the end of it, then I would say things look pretty grim and bleak. But we do have those tools to transform education and healthcare and the economy and productivity. And if we drop the ball and don't use them, then I guess it doesn't look very pretty for a long period of time. But I don't think we'll do that.
I can't spell AI, but will it change the world given the hype?
Well, there's no question there's hype, but as a famous saying that, or joke among psychologists, which goes, "Just because you're paranoid doesn't mean they aren't out to get you." Says my transformation of that is, just because there's hype doesn't mean there isn't something real there. So yes, there's a gold rush on. Yes, there's ridiculous valuations for some of these initiatives and so on, but underneath, we have this, incredibly powerful, batch of technology coming. Is it over? No. I mean, there are further breakthroughs are required in order to expand the footprint of things like robotics and autonomous vehicles. I talk a fair amount with the artificial intelligence people that try to get a feel for, what are those breakthroughs? How difficult are they to achieve, et cetera? But you go away from those kinds of conversations with the impression that there's a whole lot more to come. Will there be disruption and lots of concern? I mean, there's a lot of writing about jobs disappearing, jobs changing, people not having the skills. I mean, one of the hallmarks of the large language model is that not only is it stunningly powerful, But it's also easy to use. I mean, I don't know many people who think they need a lot of training to ask ChatGPT-4, an interesting question. So, there's studies starting to come, Rish, use of digital assistants to improve performance in so many areas it's almost hard to list them all, customer service, etc. We'll get a whole bunch of entrepreneurs and creative people trying to figure out how to use these tools effectively. And I think it won't happen tomorrow, but if you look out 4 or 5 years, I think you're going to start to see just enormous advances, not just in productivity, but in all the dimensions of human welfare that people care about.
Mike Spence, been a pleasure. Please give it up for Mike Spence.
Thanks very much, Rich. Appreciate it.
Enjoy your breakfast. Mike's
Thank
in
you
Milan.
very much. Yep.
Thank you.